Oh my gosh. So I've been following Intel for a while. I think we featured it quite a few shows ago. Let's take a look at Intel. This is a 2-year chart on Intel, and you can see that they kind of had a bottom here where they spent about 6 months hanging out in the bottom zone of where they were trading. And then they started this steady climb. Now, just because you've got a steady climb doesn't mean that premium selling is off the table. What it does mean is that you have to be a little bit more strategic. In other words, you have this initial investment that you set up that allows you to then create the premium trades after that. We call that our initial covering position. So in this case, because we've got the ever so slight trend, and we're talking about, it's not the most aggressive trend. So I could trade this as a trend trader. But what I want to do is I want to make sure I set up that initial covering position such that it will appreciate with that gradual trend over time as I'm selling premium in between. And so let me zoom back in now to what's happening currently. I'll bring us back to a 3-month chart. So we're currently at a top, and we've still got that underlying uptrend going. And so this is the perfect time if you've got that initial covering position in place. And we talked about setting up that initial covering position quite a few shows ago. If you do, now is the time you're getting this signal where we want to sell some premium. And I would sell some at the money or even slightly out of the money premium. Maybe this $40 strike price is a good premium to sell. And since today is options expiration in November, in September, I don't even know what month it is, in September. I would think about October or even looking at some of the weekly options. Remember, when we say near term, ideally we're talking about 3 to 5 weeks to expiration. So, I would look for a near term, slightly out of the money option. If there's a 39 strike price, we can check right now if there's a 39 strike price. We'll come over here to our options chain and we'll look at our October 20 options. Oh yeah, they're trading every dollar, which I would expect Intel to do. So if you sold a covered call right now, you'd be making $1.10 roughly per option share or $110 per contract. I mean, that's a payday for every contract that you sell. Then you come back here. The other thing that I would suggest we do is we buy a protective put at this time because the protective puts are going to be very inexpensive. We'll buy a protective put such that, slightly above our break even price on whatever our initial covering position is. Or if you wanted to, you could probably place it even more conservatively and put it up here at the 32 or 33. You're going to pay a little bit higher for that, but hey, you lock in more profits that way. So I would do those two transactions right now, assuming you've got your initial covering position, because anything that goes against us right now will boost up that premium selling trade and it will make that protective put work for us as well.